2, 1. Yay! Welcome back, everyone. We are now live. Today, we're going to go over some setups on NQ, just that we had throughout the week. And then we're going to dive into some ICT price action basics as per the calendar. Got a nice little calendar. Follow it. We'll follow it. And we'll make sure that you guys get a plethora of knowledge on ICT. Every day that we complete, we're going to cross it off. And then at the end of the month, we're going to post it. And it's going to be complete. Next month, we'll start a new calendar. And then, yeah, we'll just keep going until next year. Not 2025, but next year, spring. We'll see what we can do with that. So without further ado, let's dive into our stream. So, higher time frame. Let's also outline our. So you got a few levels up here, right? Was our previous weekly high, previous weekly low. We kept on saying, hey, previous weekly low right here is an important level. If we break below it, I think I've said it on every stream once we've gotten to it. When was that? Actually, Monday right here. Yeah. I said once we are below that previous weekly low, if we displace it, we are looking for some very, very good downside. And that's exactly what we did. We had a 4-hour fair value gap. We kind of consolidated around this previous weekly low, which is very important, right? Consolidation leads to expansion. And that is, we'll cover that as well. Just consolidation versus continuation. So that's what we wanted to see. Broke below it. Retested it right here on Thursday. Came back down. Consolidated more. Came back down. NFP protocol. Typical. We see a good old V on it. So we can consider this our manipulation and then into the expansion or consolidation, expansion, and then a reversal. So out of here, we want to see more consolidation and then higher highs and higher lows. That's what we want to see for us to continue. So let's go on to our 5-minute chart. Let's review some stuff. Where's our Monday? Monday is right here. Near to this little line. All right. What do we have here? That's later on in the week. Monday fun day. So right here, we take our 5-minute candle, we fib it, and then we reject the fib of it. We also took liquidity, and London session has taken the Asian session highs. We'll explain why that's important in, we have that on the calendar. On the 24th, 25th, we'll talk about that, and the 26th, kind of. Yeah, 23, 24, 25, that's when we're going to talk about just kind of the importance of these levels and why we want to look out for those sessions and why we want to notate the highs and the lows. I use an indicator for it just so that I don't have to go in every time and outline it. Just saves me the amount of lines on my chart. But over here, right, we took this liquidity. We had this liquidity to the bottom, another one to the bottom as well. So what do? We have this range right here. We fib it. That gives us a good expansion to 2618, and all of these levels that we have previously taken get retested. We bounce over here on the 2618, so then we can take this range, right? We fib this high to this low. We retrace to the 2618 of the range. We also have a 15-minute Timmy over here. So that's a little TBR setup. Timmy break and retest. Come up into here. Shane always talks about consolidation around the 50%, right? If you guys are following him inside the paper traders community, he always preaches that consolidation above the 50% or below the 50% is going to yield a move to the side that it's consolidating on. So we want to watch out for that.
Usually a parabolic move too.
Yeah.
Like a big move.
Big, very big move. Also, if at any point anybody has any questions, make sure you ask them in the chat. I'll actively monitor it this time. So make sure you leave anything. And if you're on Discord, just tag us. Tag us so that I can get a notification. Sometimes I get a little too focused in. Or raise your hand.
Lost in the thoughts.
Yeah. So right here, come up, reject. We'll also cover OTE, right? That's going to be on optimal trade entry on the 18th. We'll cover OTE and why it's important. So we're going to go all the way in depth for that ICT stuff. So then we consolidate over here and then sell back down further, 5618, and previous weekly low was our target. So we came down to that, took that out. That was a solid trade. Where is that? Right here. What is this trend line? So we're just random little trend lines. So we go to our Tuesday. Tuesday, we kind of see a similar thing happen. Overnight, we consolidated, sold back down. So now we're below this low, right, during our open session. Then we come down during the 10:15. We see a little reversal. Our inverse fair value gap setup, right, what we talked about on previous streams. We'll cover those as well. Inverse fair value gap, we displace up. Don't necessarily form a fair value gap, but we've displaced an important fair value gap that should have kept us down if we were more bearish, right? On the day, right? On the higher time frame, we're still bearish, right? We sold off further down, way past that level over here. But we had some liquidities up top. Over here, we consolidated. And then let's see what we actually did. So our trade right here, we did actually take the inverse fair value gap. You can see this trade. We posted it in our Discord like, hey, theoretical long. This could go up to whatever levels, right? We targeted the 930 high or 935 high. Grab a drink. We also threw a fib on this manipulation leg, right? From this low to this high, this inverse fair value gap lined up with the 618, 705, 786. So then we could have targeted, look at that, right to the negative 2.5 to 618 and then reject it back down. So that was that little trade. And then in the morning before anything, see, we had that outlined right there. We had another fair value gap right here, kind of kept holding, but then we fibbed this candle again, right? Or we fibbed the whole range right there. And then we came down, came up here and rejected it, sold back down. You can delete that initial bounce as well of this initial candle, came up, retested some highs. That would have been, I think we took some longs on it. So that was like literally a 5-minute trade. And then we were out. And then we just waited and then came down here. It's the biggest thing that I'm personally practicing is patience, especially in the markets. Way better with it in actual terms, but still, we're still learning patience in the markets. So previous weekly low, right? You can see how this level was important. We rejected it down over here, came back above it, retested it right here, kind of consolidated on it with this fair value gap right there. That was our 4-hour. Oh no, maybe it was just a 15. Yeah, just a 15-minute. But you can see how important that was as well. We had this previous day high right here. Price came up. We didn't necessarily take it. And then we sold back down. So this was Wednesday, right? Wednesday, what happened? We had the London range, little London manipulation before open. We had this fair value gap that it came in and retested, sold back down. London had taken both sides. So in our Discord, we said, okay, probably S&D day. Shitted and what is it? S&D? What your definition? Shitted and dumped. So you can see, shitted and then dumped right up to the top. Hit the 2618 of this range, an important level right here. Took out this liquidity as well. Had a fair value gap sitting right here. So you can outline a bunch of stuff, right? Always look left on your charts. So we came down 2618 and then expanded back up. That was your S&D because Asian session consolidation. This session was like expansion to the upside, to the downside. So then New York session, we can expect to do the same thing. Just repeat that move. We came up, did that. Then on this candle over here, we almost hit that range. Like over here, we took some shorts on it. And then once we've taken some liquidities, we took back longs. And then you can see it just rejecting off of this TBR right here. Let me outline this TBR for y'all. Right there. Reject back down, 2618. Beautiful. Beautiful, beautiful, beautiful. So let's keep going. Over here on Thursday, we didn't take this high over here. Came back down because we don't reverse from a consolidation. This whole week could have been taken, honestly. It's just a whole consolidation, right? Consolidation, NFB typically, they say, is your manipulation for the monthly. So right now, on the monthly, we can be looking for the upside because technically we manipulated below the monthly open. We manipulated below the previous month. And now we are likely looking for expansion back up. Don't quote me on that, but that is just what we, from a technical standpoint, that's what we could be looking for. Over here on Thursday morning, we outlined this move. We said, okay, we have this 15-minute fair value gap. We're kind of looking for it to break to the upside. We sort of did this move, right? But we had a little bit more of a sell from it and then displacement back up. So that was phenomenal. Then we had our 5-minute range over here. The 618, the 786, sorry. The 618 is important. But 786 held, 618 held, right? Even came back, retested it multiple times. Then we came up for these highs over here and rejected it back down. So you can take, I believe this was in the 50% of this range. Yeah, right above that 50. If we throw a little OTE on it, we reject it right at the 618. Let's see why OTE is important, right? We always want to look for discount. Discount, discount, discount. Came up, rejected that. Can even take it a notch down, right? A notch further right here. 705 would have been perfect. 618, phenomenal. Still gave you a good entry. And then we formed a little Timmy zone right here. Timmy candle at the top right, almost at the macro, 1040. During the macro, retrace into it and sell back down. Beautiful. Keep it going. What is this big old animal? I think I outlined this on the 4-hour, or on the daily. I was like, all right, fuck it, send it lower. But you can see how many important levels we took out right here at the bottom. Get rid of this bad boy. You can see all of this consolidation, right? All of this LRLR liquidity that we have taken out. And look at the wick that we formed out of it. Right, so now we are looking for this wick to actually hold. We can possibly retrace into 50% of it, right? We can watch this level, 20.0061. We've had it for a while. We said, okay, watch it. That is exactly what we were watching now. We can get rid of these lines, but we'll notate them, right? And then below bear, look at this level. That's why higher time frame levels are very important, right? You want to identify those points where market's consolidating. Those are going to be very important. That's where a lot of liquidity rests. That's where a lot of interactions between buyers and sellers happen. And I bet you if we pulled up our volume, we had a very good volume out here as price came up. So let's go back. That's Friday. Thursday, we just went over, sold back down. Asian session over here, similar thing that we saw on Wednesday, right? London or Asian session consolidation, then London session takes out both sides, and then New York session takes both sides. Same thing happened over here. Asian consolidated, London took out both sides. We had our nice candle over here, our data candle. We had a data candle high, data candle low. I knew some people were on pretty early. Some people took shorts from here to just that data candle low. That was phenomenal. Then over here, we had our little candle highlighter indicator, the Timmy patience indicator. So you can see if you waited, could have taken longs right at 9:30, retrace back up a little bit. I'm sure there's a little 1 minute fair value gap that we hit, sold back down as we were still bearish. We wanted to see price go lower into the NFP manipulation, and then from here we reverse back up. And also had a little M on the hourly, I'm pretty sure over here, yeah. I can show you guys. Let me go to my hourly, right? We had our M pattern, sold back down, M's completed, cool, head back up. We kind of have been doing that the whole week. Little M right here, Tuesday, Wednesday, Thursday, completed right here, and then a little lowercase m, come back down, retest that, come take out those data highs. So now on the hourly, we've put in this fair value gap and we bounced it. So that's what we want to look for. Honestly, kind of almost have a unicorn setup right here because we got this order block that has now been traded through. Order block, fair value gap. That's now we're looking for these highs right here. Those could all be great targets for next week, but we're also not discounting these lines, right? Because we have rejected them so much. And we're also not discounting this over here and not discounting this Timmy zone. We can retrace back up just for health purposes, right? Everything gets a little healthy pullback because like we've talked about on previous streams, interaction between buyers and sellers. Once your stock runs low, if you're running a warehouse, right, your stock runs low, you want to come up, or once your stock runs low when you're at the top, right, that's when you've sold your stock. You want to come down, buy more stock over here at a reasonable price at your what is it called? Not retail. Retail is up here, right? Retail price is going to be up here, and this is going to be your like almost market price, right? You're buying things at market price over here as a quote unquote seller or owner of the warehouse. You're buying your raw product over here, and you're selling a finished product up here, right? And then once you're done selling your finished product, okay, cool, come back down, buy up some more inventory, and then sell that inventory up top. Just put it in like basic perspective. So on Friday, right, same thing over here, we retraced. That was the retrace over here, right? This was a 9 a.m. retrace up into this wick, and then look at what we did at 10 a.m. Our 10 a.m. candle opens up. We come back up, right, thinking, okay, well, we have this range, right? We swept these liquidities, so now where are we looking? We're likely looking to the top, but this is why higher time frame is important. We take this wick, we draw out 50% of it, and guess where we reject? Right at the 50%, and we continue selling. Right over here, could have easily taken longs, right? I took some longs on this little retrace because it hit the 705 of this range, right? But we didn't have any displacement in discount. We had this little displacement in discount, but that's nothing substantial, right? You want to look for a big move. So we came down, we didn't make higher highs above this high. So, okay, we're not looking for more upside. We're still looking for downside. Hit this range over here. Well, it came up a little bit. And then if you take this range right here, OTE of this range, we also hit the 705, 618 level, almost to a T, right? And then reject it back down. We were still rejecting this Timmy zone up here as well. Came back down, right? Made a little order block over here, came back, retested it on another bounce, right? You're like, oh, sick. We're closing up. We can do an inverse fair value gap. Nope, not yet. Body didn't close. Rejected order block over here. Came back down. Now, once we swept all the liquidity and hit our important higher time frame levels, now we can start looking for the upside. And that's exactly what we did right here. Right? Capiche? For everybody? I hear Kaposh back. I forgot what this line is, or fib retrace. Is this a fib retracement of? Oh, it's the whole zone. What is that, 4 hour? I think that's what we do on the daily. Oh, that's our whole daily range, 214. So now we want to see, are we going to hold below this 214 or are we going to come back up? We can take this range, right? This range right here. Can fib that, see where our discount is going to be just because of how that daily closes. See how we don't quite have a displacement yet over here. So we can come back up, and then continue selling lower. This would be 618. This zone with a big Timmy candle over here, this would be a phenomenal TBR. Come up in here, wick this 705 into this daily fair value gap, sell back down further, and then continue back up after that. Because if you look, we've discussed this. We have been pumping and pumping and pumping. Look how big this sell-off was, right? And then we threw a measured move on it. Our 618, or we come down to almost like 17,200 on that measured move. But we also said that it's not going to be a straight down move, right? It's going to be a lot of like retracements down, retrace down. Same thing that we did on this sell-off, right? It wasn't all down. We had days that were up. We have made like, or taken liquidities to the upside and have almost made higher highs. But all of this was just a retracement into discount. It's where you sell all of your inventory. Okay, time to come back down, restock. Makes sense? Show of hands. Hope it makes sense to everyone. So now, let us dive into the price action basics. Right, a few things is like price delivery, rejection versus continuation, like consolidation. That's what we want to talk about. We can look at higher time frame to to a lower time frame. Get some lights going in here so that we kind of divide it up. Let me respond to a quick text. Okay, so daily wick. Okay, we have that, this, that, everything outlined, right? We can, let me move my stuff over here. Previous weekly low, let me outline that. Sunday open, if we don't gap up, probably. Oh, contracts roll, so March 18th. Okay, good to know. Contract roll, we can either roll down or roll up. And then over here. Cool. Right, previous weekly high, previous weekly low. We could come take the high, sell back down to the low, or it could just stay inside week, right? Just because of how big this weekly range was. That's nutty. Yeah, so see on the weekly, on this range, we can come up into here, retest the 618. That would give us that weekly fair value gap, then come back down. Like we said on the daily, we have some levels up here too. That's what we could be looking for. Okay. So, stop talking about that and go ahead and move into our next little segment. Should be the 15-minute. There we go. Okay, that's our hourly. That's these levels right here. It's this right here, and then we also outline some stuff, right? Look at that. Sell back down. What do we say? Retest again, sell back down. Friday journal. Yeah, we covered Friday journal. Yep. -1 of the whole range. Same thing with the candles out here. Let me hide some things over here. Yeah, so Friday had these lows, right? Retraced. Yeah, covered all of that. Cool. That's that. That's our big fib retracement. Also, key levels. Look at what we hit. Our green level, which is, I believe that's the monthly. Yeah, green is going to be our 3-month. If you guys are not following at Hazed Beats, I suggest you do. Go ahead and do that right now. Take a quick little 5-minute break. Go follow him. Go check out his tweets. Phenomenal trader. Right here, you can see how well the bear zone lined up, how well we had our range lined up, exactly with that 3-month level too. So what we hit that and then rejected back up, or like bounced, not rejected. I guess I could use rejected back up. These levels we want to continue just because they have held in the past. Same with this one right here. There's a low from way back over here. So everything's relevant, right? So now let's go into our price basics. Check out some crypto, being a piece of shit. Don't even want to look at it. Okay.
Yeah, the volume on the weekends is usually pretty mid, so I wouldn't even pay attention to it.
Yeah. What are we at here? Okay. So, price action basics. Just kind of identifying swing highs, swing lows. Those are important in your price actions. Some candles, you always want to look for a little blunt bottoms, blunt tops. Over here, if it's a blunt candle, right, that's typically means that there's a lot of liquidity that got trapped, a lot of sellers that just got trapped. Over here, there was no downside for it, so they all just got liquidated to the top, right? So then we always usually just return and take these stops or whatever is resting down here, or sell stops or buy stops up here. All right, the market is a whole interaction between buyers and sellers. Without buyers, you can't have sellers, and without sellers, you can't have buyers. Right? In order for you to sell something, right? If we're going back to the whole warehouse and you being the owner of the business, in order for you to sell a product, you need to have a buyer for that product, right? And that's the same thing with liquidity, right? Right here at the highs, you have liquidity, you have sellers right here, and you also have buyers. So whoever's selling, somebody's on the opposite side of that trade is buying that up here. And so obviously they get left behind, and then we continue up. That's why those big levels are important, because you have a lot of institutional interaction at those levels. Institutions, I'm taking this out of who's that? Trader's Paradise, Matt on Twitter, phenomenal guy. He's got a lot of experience and he knows a lot about the markets. Love his analysis and everything. Rocket Scooter, they build that software from the ground up. Really good. But they focus on basically, highlighting those high volume levels where institutional trading happens, right? So institutions, according to him, or from what he has studied, that institutions, they talk to each other, right? Some of them are buying, some of them are selling. So if a bunch of people have their sells over here, some people have a bunch of their buys over here, right? So somebody on the opposite side is always making money. There's always interactions happening between buyers and sellers. In terms of, right, you always want to highlight your highs and lows. I would say 15-minute chart is great for that. 15-minute is your weather belt chart according to ICT. That's where you see majority of those wicks that get taken, liquidity that gets swept. That is a lot of times, those are very important levels, right? Like over here, we had a blunt candle that got swept, and then we came right back up. Look at those liquidities, right? All of these liquidities get delivered to. That's your price delivery over here, right? We will also talk about internal and external ranges. What day is that on? Let me check this calendar. Guess we can. That's gonna be more of like tomorrow thing. It's like liquidity defined. But for today, just like identifying swing highs and lows, right? You always want to make sure you have swing high is going to be liquidity that has a lower low below it. So right here, this is likely your swing low, right? Because it has a lower low above it. Does that make sense to everyone? Same thing over here, right? We swept this liquidity, so now it becomes that right here. And then all of these levels, right? 15-minute, look at your 15-minute chart. Very, very important. All of the 15-minute wicks, they always get swept. That's always somebody's stop right here. Somebody is on the opposite side, right? I mean, these don't get retested for a while, but we still come down to them. Sure, we just delivered to them on Friday. They can rest there for a long time, but you want to identify your swing highs and your swing lows. Anything that gives you a big range, right? Big range, anything at the bottom of the range, anything at the height of the range. That's why we were outlining our Asian session, right? Asian session swing high, Asian session swing low. We have our London session swing high. We have our London session swing low. Anything that like a big move down and then a move up and then a move down from that level. There's your swing high. There's your swing low, right? You always want to make sure you're identifying those. And then price just delivers to those sides. Price delivers from buy side to sell side, from sell side to buy side. And that's where we talk about ranges as well, right? Premium to discount range. You're 50%. Let me use this GAN box. Right? It's going back to what we have talked about. As that inventory buyer, you're not going to want to buy your inventory for pretty much what you're selling it for, right? And you're not going to want to sell it for what you just bought it for. You want to buy it at market price, right? And then sell it at retail price. So you're buying it at market price over here in discount and selling it at retail price, right? And then that just continues. Cycle continues. You can throw it on any range, right? You have your swing low. Oop. You have your swing high over here. Or your swing high right there. You come down. You buy some more inventory up. Come back up over here. Come back down into your discount. Come back out into your premium, right? You're buying in discount, selling in premium, and you can flip it if you're looking for shorts, right? Like that. So you are selling right here, you're buying right there. Selling right here, buying right here. Your basic stuff. Rejections like consolidations and continuation, that is your, we've covered this on stream before. I'll show it again. Your IPDA or IPTA, intermittent or interbank price delivery algorithm. The market runs on this little cycle. So from a consolidation, right, you will never see a reversal from a consolidation or a retracement from consolidation. Consolidation is always followed by expansion, right? What do we have here? Consolidation, expansion. Consolidation, expansion, right? Big moves. Expansion is those big moves. Consolidation is anything that just like chops around. Anything that looks like a barcode if you zoom very far out, right? This looks like a barcode. This looks like a barcode. Over here, this looks like a barcode. All of these are consolidations. Consolidation, expansion, right? From an expansion, you can have a retracement. Retracement is what we call just anything that comes into your premium or discount range, right? That's a retracement. Retracement to the 50% of the range. You're not making a whole reversal from it. You are just retracing, right? So from consolidation, we go to expansion. We can go back to consolidation. We can go to further expansion. Then over here, small little retracement, expansion, consolidation, expansion, consolidation, retracement, right? And you keep on repeating the same little cycle. So then from retracement, you can go back to expansion and then you can finish with consolidation, or you can go consolidation, expansion, then you can go reversal, right? So that's kind of what happens at tops. We have consolidation, we have expansion, and we have reversal right here, right? Reversal is going to be our big move, big liquidity, and that's where you see market structure shifts, which we will cover on the 19th. Market structure shifts. We're like going into the basics. We're diving into the very, very basic stuff on ICT here. So it's like same examples, right? We can keep on following them, right? All of this, if you zoom out far enough, you can see that, right? We had this huge expansion to the downside. So now, all right, now we are in a new little market area. Now we're looking for further retracement, right? We're looking at this big range right here, retracing to 50% of it way below it too. If you fib the stop right here, right? What do we retrace to? Retrace into a previous consolidation. Those are important. On higher time frames, your consolidations are going to turn into order blocks, right? That's where a lot of you see just interactions, kind of that undecided interaction. That's where a lot of buying and selling happens. That's what happens right here. So then we retrace down to it. Then from here, we expand back up. We can even come back further down, right? As we go from external to internal ranges and then back to external. So over here, depending on what cycle we are in, we can come up, come down, come up, come down, right? On a lower time frame, you can see a lot more market structure shifts versus a higher time frame. That's why we stress the higher time frame so much. Is that because on a higher time frame, you are able to see that trend way better, way more clear, less noise, right? It's kind of like tuning a radio. Whenever that channel is not clear, you want to adjust the frequency. You want to adjust the frequency to that channel so that you can hear the actual noise that's happening, right? You want to reduce the noise. That's what higher time frame does, right? Over here, we have a bunch of noise. You're like, I don't know. This looks like it's reversing, right? Oh my God, it's going down. But no, on a higher time frame, this is might be just a 4-hour wick right here, right? 4-hour wick into a continuation up higher as you have these highs all over here. You have so much liquidity resting right there, right? And that's why, like on the 15-minute right here, right, we can take this as a consolidation over here. Then we have expansion, retracement, and then another expansion. And then from that expansion, we can go to a consolidation, right? Consolidation, and then we can expand back down or retrace if we're looking at a very higher time frame, right? So it all follows suit. Markets move in those cycles, and that's what you really want to hone in on. That's what everybody should be working on that. And that's where those higher levels come in, right? You can see what Shane has said is that on those higher time frame levels, if you have a cluster of them, right, you will see a lot of consolidations happen at those clusters. Right, and that's the same thing on if you take a daily, you have a lot of consolidation over here, just a lot of chopping around, right? Consolidation, and what we've talked about also, consolidation is kind of like compressing a spring, right? The more it consolidates, the bigger the expansion is going to be. The more you compress a spring, the harder it's going to bounce back.
Beach ball underwater.
Yeah, or like holding a ball underwater. The further you push it down, the harder it's going to come up, right? Or that's up or down, speaking in like buying or selling. Get a little drink of water. But that's the most basic ICT stuff versus / price stuff that we wanted to cover today. We are going to return tomorrow with another little live stream that we are going to preach on, our little Sunday sermon. I think Timmy might join us up too. But over here, right, on the daily, once again, you have your consolidation. It's ranging, right? A consolidation can be a simple range, right? It just depends on what time frame you're looking for. Like on a weekly, this is all consolidation. On the daily, it's going to be more of a range. On a 4-hour, it's going to look completely different, right? You have so many little market structure shifts or expansion back to internal range or to external range to internal range to external, then to internal to external, right? On the hourly, now you're seeing those market structure shifts, right? On the 15 minute, you're seeing even more movement, right? On the 15 minute, this looks like a freaking wild chart. You're like, oh my God, what is the market doing? That's why we always want to be following that higher time frame and seeing what are we actually doing. What is price? Where does price actually want to go? What is the real top? What is the real bottom, right? On the 5 minute, it's easy to call the top and easy to call the bottom on whatever move, but you're not actually calling the real direction of the market in terms of the monthly or the weekly, if that makes sense. Let me see on the monthly over here, right, as we were talking. Right, kind of hit these important levels. So we can retrace a little bit and then come back down. This monthly candle's not done, I don't think. What are your thoughts? Still got a bit to go to 17,000.
We are holding. I was just looking at NQ and daily. I think
Yeah.
we are holding that. Like if you measured that low to the high.
Yeah, right here. Yeah, that's like a 618. Yep.
So we can get a really nice like pop back up to like those old lows or equilibrium.
Yep. So right, so then we have this whole range. We retrace into internals of this range. So now we can look at this range as a whole. Yeah, where's our internals resting? Let's retrace into some internals, and then from there we can decide, are we going back for externals or are we going back down for externals?
And it's not your job to like predict that far. It's just be ready at those levels to switch up your bias, because like we could blast right through those and make all-time highs again.
Yeah, that's a good point. It's kind of just being more ready and more prepared for any situation rather than trying to predict a move. That's the big thing that I'm working on myself, is just the whole bias thing, right? You don't necessarily, that's why like I don't really like the idea of like a quote unquote daily bias, right? You should just be trading the price. What does the price want to do? I don't care for my opinion on the market, right? The market doesn't care about my opinion of it. It cares about what the price does, right? That's why we don't want to be assuming that like, oh yeah, we're going to take those highs. That's what happened here, right? Sure, a lot of people were lining over here being like, yeah, we have this wick right here. We're going to come up and grab that liquidity and then we can sell back down. Look, they left that like few points away.
And if you're too stuck on it, that's when, if it doesn't play out how you wanted it to that day, it will throw you off for the rest of the week, the rest of the month, because you just weren't prepared for it not to go your way.
Yeah, it's something that we keep stressing on our live streams. It's always, you want to build yourself a case, right? And if this happens, then I'm looking for that. If that doesn't happen, then I'm looking for another thing. You're building yourself an equation, right? A plus B equals C, or A plus C equals Y. You know, that's why you want to have those multiple variables in your equation, right? Because you're always going to be able to solve it. If we can't hold above this high, then we're looking for more downside, right? I'm not going to be looking for this upside. If we don't displace this with a reasonable fair value gap, right? Displacement, we form big gaps in price. If we don't displace this, then we're looking for downside. Look, we didn't close a full body, right? We had a wick to the top, another wick to the top, and then all of these bodies respected this level, and then we sold back down. Right? Same thing over here. If we can't displace above this fair value gap, then we're not looking anywhere for upside. We still have all of these lows that they left. That's exactly what happened here, right? Came back down. We broke below this trend line right here, right? We kind of had a nice little retrace into the discount of this range, and then we came right back down. So now you want to see, okay, is this trend line going to hold or is it not going to hold? Or same thing with the if then, right? If we are holding above this range, then we can probably flip our bias, right? Judging based on the bodies right here, right? On like a 4 hour, so we have a nice little like order block over here. So we want to make sure, okay, if we are holding above this level, then I can say, okay, we could probably come up, retest this high, just because of how sus they look, right? All of these little liquidities, that's engineered liquidity. They trap sellers, they trap buyers up here, and then come back down to where they want the market to go. So I never get too locked into your own bias. Don't, as like the most popular, most basic saying is like, don't marry your trade. Don't get married to your bias. Don't get married to your trade. If it doesn't work out, awesome, let it go. That's honestly how you should be treating any person in your life or any relationship, right? If it doesn't work out, don't beg it to stay. Don't try to make it work. Just let it go, right? If it's meant, then it will come back. If it's not, then then it was happened, right? Then it happened, and you enjoyed it while you had it. It's also the idea of being present. Make sure you stay present in life, day to day. Are you the person that you say you want to be in the future, in the moment? Or are you saying, oh yeah, once I get to that certain point, then I'm going to be that person? You have to be that person right here, right now. On that note, I think we will wrap this live stream up. We appreciate you guys for tuning in. As always, make sure you are following at Hazed Beats on Twitter. Make sure you're following myself on Twitter. Make sure you're following at The Paper Traders. We post a lot of good things on there. Make sure you're following Big Timmy Hedge on Twitter. Don't forget ES Benji. And I don't know if Rise is in here, but Rise will get a special shout out today because we did a little post live stream mention of him last time. But follow Rise as well. Phenomenal trader. Great guy. Yeah, Timmy's posting some beautiful indicators for the members here inside Paper Traders. So check out www.papertraders.io. You won't regret it. We still have 2 lifetime spots open. Those are $333 each, I believe. That's a good discount for what you're getting because the prices are only going to keep going up. We don't do any sales, things like that. Right now, I think we have a 30%, right? That's like a rare occurrence for the summer solstice, for the time change. That's our little time change sale. But after that, you won't see one again until we fall back. Spring forward sale and fall back sale. But that is going to wrap it up. Thank you guys for watching. Thank you for tuning in. We will see you on the next one. Make sure to give it a like, give it a share. We're building this on a word of mouth system. If it brought you value, we're not charging anything for these live streams. If it brought you value, give it a like, give it a share. Appreciate you.